travel, but I know my way back home. Our love ain't purely physical, but I never have to roam. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah.
Hello and welcome to JC's Stocks and Markets podcast for July 9, 2022. I am JC. I've been investing in the stock market for 40 plus years. I made good trades and investments and some not so good. My intentions with these podcasts are to share my unique thoughts and opinions on individual stocks and ETF picks with an emphasis on dividend-paying securities, which are my favorites. The idea is to share my thoughts and to possibly give you, the listener, some investment ideas so you and I can maybe make some money. During some shows, we may stray into other topics or news that affect the stocks and ETFs that we're discussing. That could include commentary on government politics, Federal Reserve policies, current events, or just thoughts that rattle through my head. To help me deliver the true picture to the listener, I've created a blog online called JC Stocks and Markets. This blog will have a record of the graphics, charts, lists, facts, helpful statistics, and anything else that will assist everyone in this audience to understand my rationale on the topic that we are discussing and to, of course, back the episode's thesis. The information will be posted on the blog prior to the podcast, so you can follow along if you wish. The name of the blog's site address is jcsstocksandmarkets.blogspot.com. That would be jcsstocksandmarkets.blogspot.com. The opinions in these podcasts are my own, and they are just that, opinions. I invest in many of the stocks and ETFs that are featured in the podcasts. I will try to let you know if I have or will establish a position in the securities. And here's my disclaimer. By all means, everyone has to do their due diligence prior to investing any money into anything. These stock picks are no exception. Do your own due diligence. With that, let's go make some money. On this episode of JC Stocks and Markets, today we'll discuss a very nice dividend-paying stock called ARCC Capital Corporation, ticker symbol ARCC. ARCC Capital has a $9 billion market cap and is a steady leader in the business development capital company area. Next graphic is a summary page from Yahoo Finance. You can see where the stock's at. 1879 is what it closed at the other day. It has a forward yield of about 9%, $1.68 per year is the dividend, 42 cents per quarter. The next graphic I have for ARCC Capital is from stockcharts.com. It's the 3-month chart of ARCC Capital. The stock price doesn't move a lot. It's gone up a little bit in the past few weeks with the market, and it generally follows the S&P 500. The next set of information that I've got is from Yahoo Finance, just a description of the company. Now I'll read it. ARCC Capital Corporation is a business development company specializing in acquisition, recapitalization, mezzanine debt, restructurings, rescue financing, leverage buyout transactions of middle market companies. It also makes growth capital in general financing. It prefers to make investments in companies engaged in the basic and growth manufacturing, business services, consumer products, healthcare products and services, and information technology service sectors. The fund will also consider investments in securities such as restaurants, retail, oil and gas, and technology sectors. It focuses on investments in Northeast, Mid-Atlantic, Southeast, and Southwest regions from its New York office. the Midwest region from the Chicago office, and the Western region from its headquarters in Los Angeles. The fund typically invests between $20 and $200 million and a maximum of $400 million in companies with an EBITDA of $10 million to $250 million. It makes debt investments between $10 million and $100 million. The fund invests through revolvers, through first lien loans, warrants, unitranche structures, second lien loans, mezzanine debt, private high yield, junior capital, subordinated debt, non-control preferred, and common equity. The fund also selectively considers third-party led senior and subordinated debt financings and opportunistically considers the purchase of stressed and discounted debt positions. The fund prefers to be an agent and or lead the transaction which it invests. The fund also seeks board representation in the portfolio companies. You're going to see that this company invests in a wide variety of companies, types of transactions, conservative as all can be, and you'll see it from the next slides. Now I want to share with you what I found on the Ares Capital website for investors. It convinced me to establish a nice position in the company for the potential of slow, steady growth and nice dividend payout, plus dividend coverage. The combination is based on Ares management philosophy for investments, capital raising, and share buybacks. You will see this in the next number of slides. First slide here, and a lot of these slides for the next few minutes are going to be from the Investor Day presentation. You're going to see that the industry selection, wide variety of industries that they invest in, and a very high quality credit portfolio, which keeps their credit rating high. They focus on defensive middle market companies, and as you can see, the weighted average EBITDA and average EBITDA of the companies that they invest in right there. Go to the next one. Consistently generated strong return on equity since inception. You can see here from 2005 through 2021, you're looking at about a 10% return on equity. This company is making money. They will return it to the investors. Next slide is the total return versus financial indices for 1 year, 5 year, since the IPO, and those are annual total return. You're going to see that you're going to get well over 10% even since the IPO. Nice company. Next slide is Next slide is an overview of the Ares company returns on investment through the two large crises that this company has been through in terms of the economy. One was obviously the downturn of 2008-2009. You can see the return on equity from in that period, and also you can see the performance during the COVID pandemic. Very nice, actually, through both those crises, done a nice job. Next slide I want to show you, and the big thing is in the lower left corner. This company has paid $27.10 per share in dividends since its IPO. It's quarterly dividend, and that's of 17 plus years and real consistent, somewhere in the neighborhood of 35 to 42 cents per share. Right now the company's at $18 and some change, and you're looking at 17 years, pretty much $27.10 of dividends. Amazing. Next slide you're going to see is basically the Ares Capital approach, their philosophy on how and what they invest in. You're going to see they look at strong returns, they look at strong companies, they look at companies with good balance sheets, good income. They invest in excellent companies, and they will give you return. The next slide I want to show you is from their May 2nd, 22 tear sheet. This is kind of what I want to show you, is that $1 invested in ARCC, Ares Capital Corporation, in 2004 would be worth $8.75 if dividends were reinvested. You can't find too many returns that are better than that. It's frankly very amazing, and that's why I jumped into it. I think this company has done well in the past. They will do well in the future. They've got very good philosophies, and I'm going to explain that a little further as we get into this. The next slide I've got is from Seeking Alpha. It's an article from Samuel Smith, and he writes for the High Yield Investor. This article was written on the 29th of June. I suggest that you look at Seeking Alpha. They've got a lot of good authors and opinions, and it will help you to gain a lot of knowledge on the stocks that you're investing in. Anyway, from his article it says, long-term success is no accident and largely stems from the following factors. Superior risk-adjusted underwriting thanks to support from its parent, Ares Management Company, which boasts a global alternative asset presence, substantial knowledge and capital, and business network scale, which gives ARC access to superior deal flow and economic insights. Prudent dividend payout policies, which have enabled the company to maintain its dividend payout and even grow it steadily over time, and that's true. Disciplined balance sheet management, balancing maximizing returns on equity with protecting the company against downside risk and maintaining flexibility to respond opportunistically to market dislocations. And you saw that from the last slide on what they did in the pandemic as well in 2008, 2009. Strategic use of capital markets, and this I think is another big key to Ares success, or ARC success. By pursuing and maintaining an investment-grade credit rating and achieving massive scale, $9.2 billion in market cap, ARC is able to take on debt at very attractive rates. On top of that, whenever ARC share price has commanded a meaningful premium to net asset value and management as attractive places to invest capital, is strategically issued equity along with cheap debt in order to grow earnings per share. Meanwhile, when ARC share price goes below net asset value, management has occasionally repurchased equity in order to arbitrage the discounted price of its own holdings. Brilliant strategy, and they execute this well. The next slide I'm going to show you are some CEO comments in the same Seeking Alpha article by Samuel Smith. And here's one of the quotes. As of quarter end, holding all else equal and after considering the impact of income-based fees, we calculated that 100 basis point increase, or 1%, in short-term rate could increase our annual earnings by approximately 23 cents per share, a 14% increase above this quarter's EPS run rate. A 200 basis point or 2% increase in short-term rates could increase our total earnings by approximately 44 cents per share, 26% increase above this quarter's run rate. Here's another quote, which is pretty awesome too. We also do not expect that a projected increase in rates will result in deteriorating credit performance, particularly given our strong starting point with portfolio weighted average interest coverage of nearly 3 times. What this means is that holding all else equal, including the leverage at the borrower level, short-term base rates would need to rise above 3% before aggregate interest coverage would dip below 2 times, which is similar to the 5-year pre-pandemic weighted average of 2.3 times. This company is positioned well for interest rate hikes, is what they're trying to say. This is the point in the podcast where I typically give a stock price forecast. Ares Capital, this investment, in my opinion, should be utilized as an income machine. Has a 10% or close to 10% dividend. Use it in an IRA with a dividend investment program. My opinion, stock price is going to follow the markets. If you look at the chart, I'm going to show you a 5-year chart. And the beta of ARC pretty much follows the direction of the SPY, and you can see it in the chart. And it only includes 5 years, but you can see that the SPY has gone up 65%, whereas ARC has gone up about 15%. But that doesn't include the dividends. If you include the dividends, it far outpaces the SPY. And it's much more conservative in terms of stock price movement, as well as just the portfolio is very conservative. And you can see that ARC was down in 2020 to under $5 per share, in the COVID free fall. But it's basically back where it was before, and it generally stays in the range of say $15 to $25. the key is to harvest and reinvest those dividends as you go, and you're getting cost averaging. Plus, the return on equity is amazing. And that's, for dividend investment, this ARC is an outstanding investment. Maybe ARC is for you, maybe not. Please do your research, vet out all investments before investing your money. Thank you for listening to this fourth and what I intend to be a series of JC Stocks and Markets podcast, and it's its corresponding blog, JC's Stocks and Markets.blogspot.com. I hope you got something out of it. Until next time, happy investing, happy dividend investing. You'll see the graphics displayed for this blog or for this podcast in the blog, and that's jcstocksandmarkets.blogspot.com again. Enjoy the outro, a song called She's the One by a band that I was in some time ago called Just One Goat. I wrote the song on an airplane, and personally, I love the song, but the credit actually goes to my bandmates. They made the magic happen. Enjoy.
I know I'm not that beautiful, but I know my way back home. A loving, purely physical, but I never have to roam. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah. Wasted all this time.